What is up, everybody? Alright, so today I'm gonna try to keep this video as short as possible. Alright, so today the trade that we took was GJ. I even put the trade up on my Discord. Right, I even said I'm taking this trade, etc, etc. So today we're gonna break down about GJ. Alright, before we do that, I would just like to say I'm not a financial advisor. The things that I do, the things that I show you, the things that I tell you is only for educational purposes only. So following it and not following it, it's totally up to you. Alright, so please backtest everything before you even do it. Alright, so two things I wanna cover first. Number one, I realized that the videos I post right on YouTube, they are a bit blurry. Alright, I'm so sorry for that. I'm still waiting on my new PC. Right, I just placed the order, so I'm just waiting on the new PC, so it may take some time for it to get delivered. Alright, so till then you're stuck with this kind of quality, and I'm sorry for that. Alright, I'll try to zoom in as much as possible so that you guys can see better. Right, okay, so as I was saying, today the trade that we took was GJ. Right, let me take a look at GJ. Oh yeah, the second thing I want to say is I hate GJ. Alright, I used to trade GJ in the past, and I just hate GJ, guys. I totally hate GJ. Right, because GJ is very unpredictable from what I've seen. Right, but recently it has been the one that's giving me a good win rate, or good wins, you know. So let's break down the trade today. Alright, so I took altogether 3 entries. Alright, you can call it overtrading, you can call it anything you want, but I was confident with my strategy, so I took 3 trades. Alright, okay, so next thing, now it's the breakdown part. Right, so as per normal, we go to our daily to see our bias. Right, so for the bias, let me go to my replay. Right, price went up, consolidated. We can see let me try to make it like that. Right, I hope you guys can see this. Right, okay, so we can see a fair value gap here that's going upwards. Right, so at this point of time we were actually going uptrend. Price tapped it, consolidated, and then decided to break with this candle right here. Right, so since it broke, we are deleting that, and then we had a fair value gap right here. So what does that tell us? It basically tells us that okay, the market wants to go down now. Correct. Alright, so this was on 4th of August. Alright, and then it went on and went on and went on, and now we are here today. Okay, so for today what I saw was, this is today's candle. Right, so what I saw was a new fair value gap was forming on the daily. Okay, ignore this and see this. Right, so this was forming on the daily because today we are on this candle and it's forming. Right, so from here I can see the fair value gap that was meant to be here. Right, was meant to be here, was already closed yesterday. So that already shows me the first thing, that it's gonna go up. The second part is today it's creating a new fair value gap. Although it hasn't created a fair value gap for me to be confirmed that it's going up, it shows me that it could be going up. Right, again, it could be. Right, so what I did next was I went down to the 4-hour, because since daily don't have a fair value gap to show me that it's going up, I went to the 4-hour. Let me replay this. Right, okay, let me delete this potential. Yeah, nah, it's okay. Okay, so on the 4-hour, today is on the 8th. Right, so this is yesterday. Oh, what was this? Yeah, so we were here. All right, so we were here and I saw this fair value gap and I actually kind of liked it. I mean, keep in mind I had other pairs that I was looking at also, but this was the pair that hit the fair value gap, right? This 4-hour candle. So what I did, I went to the 5-minute the moment it hit, right? So the moment it hit, it was about, nah, not this, it's because this is still playing around 6:35. All right, 6:35, right? Yeah, around here. So this timing is when I actually woke up, right? I woke up, I saw the trade and everything, and that 4-hour candle, remember, it's still around this fair value gap, right? So I was waiting for it and I didn't see a break of structure, market structure shift, right? Or a change of character, whatever you want to call it. I didn't see it. So you can see this line here, right? This line here. So this line was what I actually drew so that I can see it, right? So I was waiting for it to break that. So I waited and waited and waited, right? Until I saw this. Okay, so I decided, you know what, since the fair value gap was already tapped at 3 a.m, right, when I was asleep, but didn't give a break of structure here. Let me draw the line for you guys. It didn't give a break of structure here. It didn't give a break of structure here. It didn't give a break of structure here. But you only gave a break of structure here. That means the market was still going down, right, instead of going up. So okay, let me try to catch this move. The moment I saw this candle going up a bit from here, right, I automatically took a trade around when the second candle went down to this point right here. Keep in mind, this is an aggressive entry, right? This is not the way we should be entering from. How we should enter is in this fair value gap. If the market comes back and taps it, that's when we take, right? But since I was out and I was like, you know what, let's just go aggressive, right? So I just entered here for a 1:2. All right, so I entered for a 1:2 and I waited for the market to, you know, move up and all that. So at this point right here, let me just zoom in for you. That was, I think, about 9, I guess. Yeah, it's 9. So at this point right here, I saw another fair value gap. So keep in mind, right, we are in an up movement and I want to see buys, right? So I saw another up movement. So I was like, okay, this looks good to me. We had another break of structure, which is telling me it's going to go up. So why not, right? Why not just take a trade if this fair value gap mitigates, right? And good enough, the next candle actually mitigated that fair value gap. All right, if you can see, it mitigated. Let me try to zoom in for you guys. Okay, it mitigated the fair value gap, right? So that's when I was like, okay, cool, I'm taking this trade. So I took another trade, risking 1%, right? Took a trade, risking 1%, and I was waiting for it to, you know, just hit 2%, you know, just waiting, and where was it? Boom, it hit my stop loss, right? But it didn't hit my first stop loss, right? The aggressive entry one. Okay, so that means I'm still, you know, I'm in a trade, but it's just that my second trade lost 1%, right? Cool. So this trade was a loser trade. So now let's review why we lost. Okay, let's see. All right, so on the 30-minute, right, so this actually works on every lower time frame. You will see the same thing. In this case, if let's say we are doing a let's say a 30-minute entry, right, this was our break of structure, this was our fair value gap, this was the mitigation, right? Or you can even use this as the mitigation, right? But if you're going to use 30-minute and all that, then your stop loss is going to be huge, right? So if you are into trading, like, you know, lower time frame but you don't want to go 30 minutes, you can also look at it at the 15-minute. I'm sure we will definitely have a fair value gap there. Yeah, we have a fair value gap there. So take a look at this, right? This is not a break of structure, so let's see this. All right, so we have a fair value gap right here, right? If you can look at this. Okay, let me just delete this so that you guys won't get confused, right? So we already had a one loss there, right? So let me just put it here, -1. So we already lost like 1%, all right? I guess it's too small. Okay, so we already had -1, right? So let's say you're actually using the 15-minute and you just want to take a good trade, right? So you took a trade here on this mitigation right here, right? Technically you would have already took it right here with your stop loss over here, right? So it'll be something like that, and it would be a 1:2. So why did this trade lose, right? It's because on the 15-minute we also had a fair value gap, right? And our stop loss was supposedly here and not, where did I put the stop loss? And not here, right? My previous stop loss was like around here, so that's why we got stopped out. But no worries, we are still in the trade. Let's see how it goes. I'm just gonna delete this and we're gonna see how it goes, right? So this is a 15-minute entry, right? Let's see. So this, right, since I lost this trade just now, I was waiting, and at about 135, right, I actually saw another break of structure. Same thing, right? I saw another break of structure. I saw another fair value gap, and I decided that, you know, this is going to be my entry if it takes again, right? And it tapped, right? My stop loss is going to be here. So you may ask, right, but there's another fair value gap on top, why did you not take from that? Simple, because on the 15-minute, right, this was my fair value gap, right? So what I did, I actually used that the 50% thing, right? I used that 50% of the fair value gap to take it, because as you know, I already lost 1% and I'm in a trade for another 1%. So anything can happen to the trade. It can even fly back down. So I'm not taking the risk. So I went to the 15-minute, used the 50% of that fair value gap, and I took the trade. So it led me somewhere around here, right? So, oops. So what happened next was I just let it ride, right? Just let it ride. Nearly hit our stop loss right here, but it hit our 1:2, and this also got hit. So in conclusion, we are already up 4%, right? 4% minus this 1%, we are up 3%. So we made 3% today. All right. So let's come back to this 15-minute, right? Wait, maybe not. Let's come back just to this 15-minute first, all right? Let's see whether we hit. All right, right after that, the price just flew up and it hit, right? Another 1:2. So we would have been up 5% if we took from the 15-minute, but we did not, and we are not going to be crazy and greedy, you know? So we're just going to let it ride, right? So if you guys have seen my previous video, I usually just take partials at 1:2 and I let it ride all the way, right? Okay, I'm going to off my replay mode and I'm going to show you guys something. Imagine in a day like this, right? You lose 1%. Let's just put up that 1% now, right? You minus that 1. You lost 1%, okay? But you took partials at here, right? And then you just let it ride, right? You just let it ride, and maybe let's not put random points, right? Let's do proper analysis, Alright, let's go to the 15-minute. Let's see if we have any good swing points or anything like that. Alright, this is a good swing point. This could be our potential targets. Right, these could be our potential targets. So just keep in mind all these green color lines that are making all these liquidity points are our potential targets, right? So let's say, right, we're still trailing, we're still going up, right? But let's say I looked at the market at around what time was it? 7 o'clock, right, for New York session. Right, let's just put it here. This is a 1:7, right? 7%. Right, let's look at this. This is around 5%, I guess. Yeah, it's around 5%, right? So 5 plus 7. How much is that? 11, right? Wait. 7, 8, 9, 10, 11. Bro, my maths. What? It's 12%. Yeah, correct. So it's 11% after -1. Yeah. Yeah. So we would have gotten 11%, guys. In a 100k account, that would have been huge, right? 1% is 1,000, and you had 11%. That's like, oh, bruh, that's a lot, bruh. But yeah, so that's the power of this strategy, because I won't even say it's a strategy. It's just you following price action. Many of them say, oh, you have this strategy, you need to use that strategy, but end of the day, it's just following price, guys. Okay, I know I wanted to make this video short, but it's long. But I hope you guys learned something from it, right? Use your higher time frame to play with the lower time frame. That's all I got for you guys for this week. Signing out. Peace out. Stay hustling.